Welcome, dear traders. The US stock market is losing momentum due to weak earnings reports of tech giants. At the start of the week, Apple, Microsoft and Alphabet unveiled disappointing quarterly results. Yesterday, Meta and Samsung revealed negative revenue reports as well. As the result, Wall Street closed in the red. What's going on in the Asian session today? What sentiment prevails? Watch our video review and find out the answers. Let's start. While the heavy-tech Nasdaq is extending losses due to weak earnings reports of the tech companies, the Dow is scoring gains. The main reason for its rise is the strong revenue reports of companies included in the index, as well as the positive outlooks. Apart from that, the index is up amid expectations of a slowdown in a monetary tightening. Investors are still cherishing this hope, even though the majority of Fed officials have already backed further aggressive tightening, and the Fed is strongly committed to hiking the interest rate until inflation steadily runs at the 2% target. However, the central banks of Australia and Canada, which have also been raising rates aggressively for some time, have shifted to a less hawkish stance. For instance, the Bank of Canada announced a smaller than expected 50 basis point rate hike yesterday. It revived hopes that the Fed could do the same. Perhaps there is a chance that the Fed may revise its stance despite its adamant position on aggressive rate hikes expressed in the previous statements. When several major central banks start to move away from a monetary tightening, others may follow suit. However, the majority of traders are confident that the Fed will hardly undertake a smaller rate increase at the November meeting. According to the FEDWATCH tool, the chance of a smaller rate hike totals only 11.5%. So, investors are now more focused on the possible outcome of the December meeting, although concerns about the global economic downturn are mounting. Optimism is gradually returning to the markets amid expectations of a smaller rate hikes by the end of 2022. And at this slide, negative economic reports, for example, about a decline in home prices, are now viewed as positive ones. Such macro stats are signaling that the economy is slowing down and the rate hikes are working. The US dollar, which has been rallying throughout 2022 on the Fed's aggressive monetary policy, has stepped on a rather shaky ground. Usually it's moving in the sideways channel ahead of the Fed meeting and soars to new highs following its results. This time the situation is quite different. The greenback declined. Analysts believe that the US dollar and the US Treasuries are falling across the boat due to high expectations of a less hawkish stance next week. In the Asian session, the US dollar index was trading at 109.82. After sliding by more than 2% to the monthly low, it kept fluctuating in the price corridor of 109.53 and 109.89. However, the long-term outlook remains bullish. The current pullback is likely to be consolidation, not a downward reversal. The Fed is expected to hike the rate by 75 basis points for the fourth time in a row. It will happen next week. The US dollar is set to rebound following the meeting, as many central banks worldwide are shifting to a less hawkish stance. The Bank of Japan, with its ultra-loose monetary policy, no longer looks like an outcast. The Bank of Japan meeting will be held tomorrow on October 28. Analysts are sure the regulator will hardly surprise traders with its decisions. It's projected to keep all the monetary policy parameters unchanged. It may also express its commitment to a dovish stance in the long term. It means that the regulator will continue to conduct bond buying operations, keeping the yield of Japanese government bonds near zero. The yen may depreciate even more due to the dovish stance. The Ministry of Finance is ready to intervene if necessary, and Japan has a large foreign exchange reserve, but it's not limitless. Therefore, currency interventions are unlikely to halt the growth of the yen. It's projected to rise above 150 and 155 and even 160. Today, the yen regained ground, taking advantage of the US dollar's weakness. In the Asian session, the dollar-yen pair was trading at 145.88, hovering in the downward range of 145.08 and 146.48. The Aussie also made an attempt to climb amid a drop in the US currency. It managed to resume a short-term rise, growing to 0.6520. The Australian dollar was boosted by the inflation report, and now the Reserve Bank of Australia will have to switch to a more aggressive approach. Notably, the less-than-expected hike of the key interest rate by the Bank of Canada had the opposite effect on the Canadian dollar. That's why the Australian dollar, which will hardly get support from lower oil prices, has already dropped to 0.6473. The currency is likely to see a gloomy future since global central banks are expected to choose a more dovish stance. During the Asian trade, the Australian dollar was moving downwards between the support level of 0.6469 and the resistance level of 0.5524. Meanwhile, the New Zealand dollar managed to benefit from the situation. It jumped to the highest level last seen 5 weeks ago. Now it's trading at 0.5831. The New Zealand dollar gained in value thanks to the US dollar's weakness and the support provided by the Reserve Bank of New Zealand. In October, the regulator raised the benchmark rate by 50 basis points. What's more, the country's inflation eased to 7.1% from 7.3%, pointing to the fact that the peak is already past. That's why the New Zealand dollar has every reason to rise. During the Asian trade, the currency was fluctuating within the range of 0.5818 and 0.5871. And this week, global central banks have been shaping the market movement. Today, the European Central Bank is going to announce its key interest rate decision. The US will disclose data on GDP, durable goods orders, and employment, following our video reviews. To keep abreast of the latest news, and we wish you profitable trading. Stay tuned.